What's up, everybody? Steve here. I think a lot of people are asking themselves, are we in a housing bubble? Today, I'm going to review and read the definition of a housing bubble, and I'm also going to speak about three key components of why I believe that we are, in fact, in a housing bubble. Now, this comes from Investopedia. A housing bubble or real estate bubble is a run-up in housing prices fueled by demand, speculation, and exuberant spending to the point of collapse. A housing bubble is a temporary event, but it can last for years. Usually it's driven by something outside the norm, such as manipulated demand, speculation, unusually high levels of investment, excess liquidity, deregulation, real estate financing market, or extreme forms of mortgage-based derivative products, all of which can cause home prices to become unsustainable. It leads to an increase of demand versus supply. So let's jump back into this. The first thing is manipulated demand. Think about it. These iBuyers and institutional investors are coming in. They're overpaying for properties. They're beating out the traditional home buyer. And right now it's estimated that they are buying 1 in 5 homes. Now take that aside and let's talk about how the US government has manipulated the real estate market as well through foreclosure moratoriums, eviction moratoriums, the forbearances, artificially low interest rates, and the rapid purchases of assets. The next thing mentioned in the housing bubble definition is speculation, and I believe that we are seeing a lot of speculation. I think that a lot of people are looking at the real estate market. They did nothing to a property, and 5 months, 6 months, a year later, they're selling that property for a tremendous return. And I was speaking to a real estate client the other day where we sold pre-construction, and they purchased that property, I believe, for around $400,000. And recently, this property is not on the market. They got offered almost double what they paid for the property. And the same person was thinking, wow, this is incredible that my property just doubled in value. And now they're talking about buying another pre-construction property in a nearby community with the anticipation of when it COs, when the property is completed, of flipping that property in 12 to 14 months. Now, speculation occurs when there's perceived valuation and perceived appreciation in a market. And if that appreciation is not sustained and it flattens out or goes down, then that person stands to lose a lot of money. And the other part of the housing bubble definition talks about excess liquidity. I mean, look at what has happened over the last 24 months in terms of pumping money into the system through quantitative easing, through historically low interest rates, through stimulus checks, through PPP programs, and other means to stimulate the economy. Well, guess what? Now the Fed is up against their backs with limited options on what to do to stabilize the economy. Right now, we have rapid inflation due to the amount of money that's been pumped into the system because there's limited stuff that has been produced, but a whole lot of dollars in the system that are all fighting for the same products and services, which is increasing the price of all of these. Now, in the next couple weeks, we're going to find out just how high the Fed intends on increasing rates. If it's too low, we're still going to see rapid inflation. And if it's too high, it could push us into a recession. They're damned if they do, and they're damned if they don't. Let me know your thoughts below if you think that we are in a housing bubble. I appreciate every subscriber on this channel. Thanks a lot for being here.